Hello, this is Jordan. This video is being recorded on the early evening of Tuesday, February 6th, 2024. Thank you so much for tuning in. If you haven't already, please subscribe to the channel. I would really appreciate it. And in this quick video, I'm going to talk about gold's volatility indicators. Now, I did one or two videos on this in the last year, so I thought it was a good time to do another update. So just one chart here with a number of volatility indicators. Here's gold. This is a weekly chart. We have a band of the long-term moving averages. This is equivalent to the 400-day, one of my favorites. The 170 week is equivalent to the 40-month. And then I just pick stuff in between. And we can see the moving averages. They're coalescing. They're very tight, the distance between them all. And you can see, and they're also, they were flat here. Now they're slightly trending higher. You can see that that's usually a pretty good sign for the market. As for a potential breakout coming, and we had this here. If we go back to the beginning of the last secular bull market, it took off here before the moving averages did that. You can go here in this 2003 breakout. This was... You could put a line here. This is like a 6-7 year breakout. The moving averages were tight, trending up like that. Also same, well, not quite here, but very close when you had this big breakdown. And so here we have the volatility indicators. These are just a couple different Bollinger band widths. Then we have GVZ here, it's basically the gold VIX. That's all you need to know. It's a gold VIX. Average true range is another indicator. And then this isn't a volatility indicator, but it's kind of a, more of a sentiment indicator. You could say the open interest on gold. And I'll start with that. Well, actually, I'll start by mentioning these vertical lines. They mark points where the volatility was really low, and that led to a breakdown or breakout move. And so these three, 1, 2, 3, and then this one, actually 4, those were bearish. Now, these, of course, you had, at least right here, you had a breakdown, but it wasn't a major breakdown like 2013 or 1996. It was just more of a correction, actually. So the market reset, and then, it got back into a really bullish position with respect to all these indicators, and then, this setup, testing that resistance. So anyway, let's go over these indicators and see where they are now. And so these horizontal lines, I drew these with respect to, the last 5 or 10, 15, 20 years in particular low points. And so we can see, this really, this Bollinger bandwidth, and then this here, the ATR, those are the only ones that are not in a really low position. This one here, it's moved up a little bit, but you can see this is fairly low. Going back, you have to go back 20 years. This is one of the lowest points in 20 years. Bollinger bandwidth for 80 weeks. Now that's a really long time frame. Maybe that comes down a little bit. I'm not that concerned with it being high. Average true range here. It's a little high, but it's still, well below these peaks here in 2020 and 2011. And so if the market corrects and consolidates for a few months, that could presumably come down more. And so if you get this to decline more, then it's probably, it will get really close to a 4-year low. GVZ, I think this is one of the more important ones. This is, actually traded. So people are trading this contract. I think it's even more powerful than the others. And so the gold VIX, that's pretty, if that falls a little bit more and it gets down to this blue line, you're talking about one of the lowest levels since this contract started. And so that's almost 15 years. And even with where it is now, it's at one of the lowest levels in 15 years. So finally, let's go down to open interest. So 430,000 contracts as of last Tuesday. But if you look on the CME Group website, you can get that daily. And it's actually I think it's at 418,000 contracts now. And that's pretty close to this low, this line here. This low here, I think, was around 420, and then, or 418, I should say. And then these lows here are around 413. So this is at 418 right now. Again, because this data in this chart's a little delayed. But with where it actually is right now, that is really, really close to a 5-year low. And, we could have extended this line even more back to 2017. So in the last almost 7 years, call it 6.75 years, there's only been, right here, and then these lows are at 413. It's at 418 right now. So this is not only is it really close to a 5-year low, it's also really close to a 7-year low. So, and this is what happens. You get these types of developments preceding a huge breakout move. And then, of course, we have this super bullish cup and handle pattern. The handle, the consolidation of the last 3.5 years, it's just super bullish. So it's possible in the short term, over the next couple weeks, month or two, maybe you see a little bit of a sell-off. I mentioned, if this loses 2,000, it could come down to 1,900. The long-term moving averages, look, they're 1,860 up to 1,900. So not predicting that, but, there is a possibility this could come down, maybe come close to testing here. Then it goes back up, consolidates for a little bit. Fed has to cut rates and boom. Not saying that's going to happen the next month or two, but, presumably that could happen when you're looking at 3 or 4 months. And again, another month or two of no breakout. Let's just say 2 months of no breakout. These indicators are going to continue to come down. And that's the setup. That's the setup you get that facilitates these huge moves and these huge breakouts. And again, most of these indicators, and GVZ, because it's not it is an indicator, but it's traded. Most of these, they're in position for the market to break out and make a huge move after that. And you go back, here's 2019. Look at where these things were. Look at where this was. Historical low. Look at this. Wow. The GVZ was at an all-time low. Look at this. Average true range indicator. Wow. That was at an 11-year low. And then open interest was pretty low. It wasn't as low as the here. Still pretty low. You can see the same if you go back. This was a real epic breakout. The 2005 move. Because you did have a huge move up into early 2008. You basically had over a doubling in, I don't know, was it 2.5 years, something like that. But you look at where these indicators were. They were pretty low. Anyway, just haven't done a video on volatility for a while, so that's where we are. Still in really, really good position. Doesn't mean it's going to break out tomorrow, next month, or the month after. But this is set up. This market is set up for a really big move. I know everyone's pissed off. They hate gold stocks right now, but this could be completely different 6 months from now. This could flip on its side. So pay attention. Get ready. Let me know what you think. Leave a comment. Talk to you guys again in the next video.